So you all know us by our earlier avatar, which is Reliance Nippon Life Asset Management Company. See us in a new
Reliance Alternate Investments is now Nippon India Alternate Investments. Reliance PMS is now Nippon India PMS. Nippon Life Insurance Company is a 130-year-old Japanese institution with total assets of over 49 lakh crore.
So we talk about the next big opportunity, which is alternatives. And what we will do is, between Varun and myself, tell you a bit about, one, the opportunity, and two, a bit about ourselves and what we do in one particular niche of that, which would be of great interest to you, which is in the long-only equity portfolios, right? So this is just one slide on what's happening globally. And while I guess there is a lot to speak about, I'll just focus on a few things out here. Point number one is that alternatives since 2005 are growing at more than twice the rate of traditional asset managers. So that's quite a bit for a long period of time. So that's happening globally. And very, very importantly, in terms of its size, well, it's 6 times the size of India's economy at this point in time and still growing at a very, very healthy clip of over about 11% per annum, which is a fair clip. Most importantly are the numbers which is thereafter, that while it accounts for 12% of industry assets, it accounts for a significant amount of the profit, and we only expect that number to go up even more significantly going forward. So that's something which just gives you a sense of the size and scale, not getting into the different asset classes, etc., which it all covers, but that's just from a flavor perspective, it's probably the hottest thing going on overseas. Just a bit about what's happened in India. India has had a stupendous growth. So if you look at the PMS market, which is now I'm referring to discretionary equity PMS, that's about 1 lakh crores. We look at the AIF industry, that's another 1.5 lakh crores, that's 2.5 lakh crores, a very significant amount of relative to what is there in the same mutual fund space, right? So already in the last few years, it's grown to a very, very significant amount. Why is it growing? I think various reasons, and we'll talk about it later, because people are looking beyond, I think since 2000 and maybe 8 and 9, and people are looking beyond the traditional assets and trying to look at innovative offerings in debt and equity, and that's what we really offer. They're looking for managers to deliver alpha, and one thing which we'll talk about, increasingly traditional pools like mutual funds are getting regimented. So if you are seeking alpha, you probably got to come to some alternative manager. There's no assurance he will deliver it for you, but there is certainly scope in terms of the structure of the vehicle that you can do it, and that's really why it's been growing. A lot of HNIs are accessing mutual funds directly. So really, from a lot of your perspectives as IFAs, it's important to look at different asset classes which is out there, right? And the great part of the industry, it's got growth for everybody, growth for large managers like ourselves, for boutiques, growth for just about everybody. That's wonderful. That's the numbers. You've probably seen it before, but just highlight a couple of numbers, and that's the following. The number to focus on is that 1,45,000 crores, which is the actual money raised, which is a fairly significant amount of money, like we mentioned. That's the real number which you should be looking at, and that's raised within a very short period of time. That's really a wonderful thing. The great part is also there are a lot of participants, and I think I must emphasize this. It's participants across the larger players, smaller players, boutiques, just about everybody, and everybody's doing extremely well. There's a lot of scope out there, right? Strong growth in the industry. Again, different categories, not to belabor this point too much, but just very quickly, there are 3 different categories which you all know about. The category which I imagine a lot of you are interested in is category 3, which is either your hedge funds or long-only equity funds. That's something which is of great interest to, I would imagine, a lot of you. We incidentally participate significantly in both category 2 and category 3, but in this session, we'll be focusing primarily on category 3, right? So we do a lot of credit, we do a lot of real estate, we do, of course, public equities, and Varun is our guy for that. Coming to Cat-III AIF, which we mentioned is the focus of our discussion, which is, so what's the growth of this sector? When you look at it, it's actually been close to 100% per annum over the last 5 years, right? And this is despite not the most favorable tax structure, which actually is a tribute to how well this is done. So this includes primarily 2 categories, long-only funds as well as the hedge fund category, a long short category, a lot of which you are aware of. And we will talk more in the next some time about the, let's just say, long only AIFs. So why long only AIFs? I think various reasons, and when I say AIFs, I'm talking about AIFs and PMS too, and various reasons why they've grown. So between the long only AIFs and PMSs, we're looking at around 1,25,000 crores, which has come in the last some time. I think increasingly, investors are looking for, I would say, alpha. And as you've seen in mutual funds, as mutual funds have got increasingly regimented, you know what's happened over the last 1.5 years. Mutual funds are looking that much more standardized, they are more benchmark hugging, and their scope for, let us call it, any experimentation or material deviation from their benchmark is very, very limited. So nothing wrong with that, that's great, because you know they cater to a different audience. For the HNI audience, which I would imagine all of us sitting out here cater to, I think they're looking for something differentiated. And the vehicle for that, possibly the best vehicle for that is really your PMS and AIF. So what's happening to the traditional pools? There's very large flows. You know what's happening to mutual funds. You've got mutual funds of size of 30,000 crores each. There's a lot happening out there, and you know these funds are increasingly correlated, so they come to guys like ourselves to manage this money, right? I think clearly our ability in this category would be, to the extent we can continue to, I would say, generate the, you know, the alpha, we'll continue to get money out there. And HNIs, to our mind, while you know no one class is substituting the other, so while the traditional assets and traditional managers will continue to be there, we believe that there is a lot of scope for guys like ourselves going forward, right? What are the benefits of Cat-III AIFs? Very, very clearly, there are a few benefits. People like the following. People like the fact that we have skin in the game. So for every time, for all the money we raise, we've got to put in some money of our own, right? So we are very, very, if we've done, let's say at this point in time across our schemes, we've got close to 75 crores of our own money out there. And therefore, you know, there's a lot of us, for ourselves riding on it, just as it is for all our investors. And people seem to like that, you know, so there's complete alignment of interest, no conflict, and so on. Most important is, I think it's fairly flexible. Both the AIF and the PMS regulations are extremely flexible in the sense that you can actually go out and do the right thing, as in you have flexibility, you can pick up stocks. It's not that we take inordinate risk, but you can do that. A lot of scope for alpha generation, which I touched upon, and ease and convenience, especially in category 3 AIF, no separate demat account to be opened, nothing like advance tax to be filed, it's all paid at the scheme. So these are some of the few key things which are very, very easy. It's very easy, it's easier to sign up than a lot of PMSs, and that's one of the reasons why the AIF business is growing. Long only category 3 is growing very well. Moving to, you know, talking a bit about ourselves, the true test of any manager is how they do in bad times. अच्छे times में तो सभी कर लेते हैं ना, तो बुरे टाइम में कैसे करते हैं? And I thought we will talk to you a bit about how we've done, and more so a bit about how we've done in more difficult times. So Varun, my fund manager, does all the wonderful work on the equity side, and he'll take you through a bit about what we do. Yeah.
Thanks, Shahzad. In terms of the products, I'd just like to make one very, very simple point, that in any market regime, and we all know last 2-3 years have been pretty difficult for Indian equity markets. What we see is that there are always some theme which is working all the time. We just have to work a little harder to identify that particular theme or set of investment ideas, that will do well. And what we have done at Nippon India AIF is what we have identified those themes that we believe are particularly strong, right? So we launched a fund which we called the Big Switch Strategy around 2.5 years back, and it was a very simple theme in the sense that what are the products and ideas which will benefit from this shift from unorganized to organized. As you know, Indian economy largely is unorganized, and there are a lot of businesses, be it jewelry, be it luggage, be it footwear, they are seeing very, very rapid shifts. In fact, if you see in the last 6 months, when economy is growing at 5%, there are certain themes which still continue to deliver results, where we still see companies delivering 20, 25, 30% profit growth. And this is one theme which has continued to grow in India, and our view is it will continue to become even larger going forward. So that was the first fund, which is a pure mid-cap strategy. Then we launched a financial services fund. Again, what is special about this? As we all know, banking was a big sector of the economy. If I were to just share some numbers, in the last 2 years, 5 lakh crore of market cap has been created just by the listing of insurance and asset management companies. And do we know the total market cap of infrastructure sector in India? Any guesses? Anybody would like to hazard a guess? What is the total market cap of all engineering infrastructure companies in India? It is less than 5 lakh crores. So the point that I'm trying to make is big sector emerged in the last 2 years out of the insurance, AMCs, wealth management companies that we are seeing listed today. And you have seen the kind of wealth which got generated, because of listing of these companies. So again, another example of identifying the right theme and then riding onto it. And third, I think all of us talk about millennials. We launched a fund where we said we will invest in companies which are going to buy the stocks which are a direct play on the products and services that the millennials like, right? And then lastly, we launched a fund about the next billion, which is the tier 2, tier 3 population of India, which we believe is now the next aspirational class, and which we believe is going to be a big driver of consumption in the next few years. So why I'm explaining these themes? If you look at these numbers, I know these funds have been around for more than 2 years, and they will tell you a story in the sense that the big switch strategy, despite being a pure mid-cap strategy, 99% portfolio in mid-cap names, we have delivered a 7.5% absolute positive return in a time where mid-cap index has been down 20, 30, 40%. A lot of mid-cap companies, have done very, very poorly. In fact, on a since inception basis also, there is a good 14% alpha that we could see in this theme. Similarly, if you look the millennial theme, the last 1 year return comes to around 16% versus around 2.5% in the broader market. So it's a double-digit outperformance over the benchmark, in the last 1 year, where, as you all know, was one of the toughest year for Indian equity markets, right? Similarly, if you see our financial services fund, last 1 year return of around 15%, next billion, 1 year return of around 8%. So consistently, we believe if we do good themes, if we identify the right secular theme and invest in that for a 3, 4, 5 year period, there is no reason why you cannot make money, even if it's a very, very tough equity market. I think the biggest job for us as fund managers then becomes to identify those themes and ideas which will continue to do well. And if you see what is the proof of that these companies continue to grow, these are the profit growth numbers. So being a fundamental analyst, I will talk about profit growth numbers. If you see the FY19 earnings growth of these companies, if you see 100% plus, of course, is an aberration driven by corporate banks, but X of that also, we are looking at a good 20% earnings growth in all of these portfolio companies in the last 1 year. And there is no reason why these stocks will also not do well if the companies deliver these kind of earnings growth. And that is reflected again in Q1, which was again very, very tough from an economic perspective. So our point remains, and especially to all our IFA friends here, who have been selling, I think PMSs in a very, very big manner. We believe that AIF as a product which you can, where a customer can come and invest in a drawdown construct. So an investment of 1 crore, but spread over a period of 9 months to 1 year, let's say 33 lakhs in each installment. That is a very, very attractive proposition. The staggering out of investment also ensures that the money is invested over a period of time, and therefore any event risk can be mitigated. And therefore we believe long only funds in a category 3 construct are extremely useful for all the investors, and therefore I think for all of us who are part of the IFA community, definitely would be looking at this product in much more interesting manner and much more enthusiastic manner going forward. So I will just request Shahzad to sum up the...
do you want to just briefly talk about PMS performance too, very briefly?
Yeah, so I think the same philosophy, so this is what we basically use from a investment philosophy perspective. I think, last 1 year we have had, very, very, calm experience, unlike the storm that has been brewing in the markets. A lot of, you see controversy about banks, NBFCs, housing finance companies, some companies having auditor issues and stuff like that. Thankfully, we avoided all of that. And I think this comes down to one very, very basic principle. What we use in our PMSs and AIF consistently is that look at companies with zero debt or negligible debt. In fact, 90% of the time, companies go bankrupt in India for one very, very simple reason. They took up too much debt as compared to what they could sustain. And when the times go bad, most of these companies really struggle to deliver on that, right? So what we have seen that as long as you can prevent those mistakes, businesses can of course go up and down, but mortality can be significantly reduced by using a framework like this.
PMS.
So we have 4 PMS products, which are there, and they're all again all thematic in the sense that we are looking at interesting thematic ideas, and I think again the same philosophy works, and we have seen them delivering results in the past, and we believe that will continue to deliver results even in the future. So I think I'll invite Shahzad for the concluding.
So that's that. I would like to just highlight across this. We've not showed you the PMS slide, but I think it's pretty much up there that across our, I think the most important thing we as managers need to do, and this ties into the summary, is to deliver consistently. It's not about PMS and AIF should not be only teji ke ghode, and a lot of people see ourselves like that, right? Ke teji mein we will do well, mandi mein kya hoga? I think we've got to do well in both teji and mandi. I think these, what I would focus on in our numbers, both in PMS and AIF, it's been consistent across time periods, consistent across all our funds. In fact, there is close to 90% of all our AUM is in Q1 over the last 2.5 years, which to our mind is, sort of tribute to the strategy we do. But very quickly, just winding this up, since we've run out of time, if I look back and say that what do we need to do, I tie it in this, that as managers, as we need to be consistent, we need to deliver. We cannot do anything to hurt our own industry because our industry has an extremely bright future. The most important thing is the conduct of everybody in this room. If we all conduct ourselves appropriately as managers, as distributors, partners, we should all, to our mind, do very, very well for ourselves. I think that's what we mean by avoidance of excess. Focus on doing the right thing for the investors, which is creation of alpha, which we will. And we think there's a lot of future today from retail investors, tomorrow from institutions, and there's a long way to go. So with that, thank you for your time. We hope this has been useful and look forward to interact with all of you thereafter. Thank you. Bye-bye.